Roger Dodger. All right. Okay. Let's go ahead and get started then. Like I said, for those in the chat room, if you guys just want to drop any stocks that you want me to look at tonight, that'd be great. I'm going to give you just some market thoughts and just a quick subject matter I'll touch on tonight as well in regards to trading successfully, and go over our current portfolio and any stocks that you guys want me to look at. So, and I don't care how many there are, I'll go over pretty much every one of them. So, unless we get a load of stocks, I probably don't expect this to go longer than about 25-30 minutes tonight. In any case, though, I got on my screen right now the S&P 500. Another week where we finished higher. The market is just on a unabated tear. We got 1, 2, 3, 4, 5, 6 weeks higher. Typically, that's a pretty hard thing to do. We did see it some back in January of last year where we rose basically 5 weeks in a row. We had, and then after that, a break-even week followed by another 5 weeks. We saw it again in July of last year where we rose 6 weeks before we had a 2-week pullback, and that 2-week pullback was pretty minor. So it could be that just based on historical norms, and then again you got it in December. We've seen a lot of rallies that occur in December and go heavy into January and then start seeing a little bit of weakness as February approaches. So in December of 2010 we had 7 weeks straight up followed by a 2-week pullback. So they're not unusual per se, but once you start getting into the 6th and 7th weeks, it's oftentimes accompanied by a pullback. Now, the market now doesn't really care about the market past. So because we're up 6 weeks in a row doesn't necessarily guarantee we're definitely seeing a pullback. We could go for 10 weeks straight and still not even be done with it. The market's past gives us a precedent for how it acts and how it performs, but anything can happen going forward. It's sort of like sports. Records are broken all the time. Almost every day you hear of some sport where somebody's reaching a new milestone that hasn't been reached before. So using the sports analogy, and anything can happen in the stock market. And that's where so many people get themselves into trouble. Instead of observing and noting and being ready for what could very well happen based on past precedent, they start trying to front run the stock market, and that's really where I've seen more accounts imploded and destroyed, is folks trying to time market tops and time market bottoms. And you know what? I mean, it was a few years ago where I was playing with options, and you can read my article. I did a 4-part series on it a couple of years ago about August of 2010 being like one of the craziest trading months of my life, and I actually came out of it profitable through my trading, but the amount of stress that it created hitting a market bottom, in which I did, but it wasn't a perfect call on my end, and I probably had to utilize more resources than I preferred to use, but in any case, careful about shorting this market. It could continue to rise for weeks and weeks still. Yes, Coates remembers probably that article because Coates has been around the site for a long time and knows exactly what I'm talking about. But it was a very stressful month of my trading, and something I learned some invaluable lessons from. And honestly, I probably did not deserve to be profitable during that month. I probably should have stood to loss a lot more than to just be completely honest. It was a little bit irresponsible on my part. And that's why I always try to stick with the swing trades. You don't see me really venture off or post any other trades outside of swing trading on the site, because that's my niche. That's what I do really good at, and that's really what I stick with. At times I'll go out, and I've done futures before, options and everything else, but I've always come back to the swing trade. I actually never have stopped the swing trading, but sometimes I'll get what do they call it? I'll have some aspirations for trying to expand beyond the swing trading, and that's sometimes where I get myself into trouble with, is trying to add too much to my plate. So yes, I am a swing trader, always have, always will be. I'm not really crazy about adding options to my plate or anything else. But back to the whole point about the S&P 500. Based on what I've told you, it would seem like we're due for a pullback. 2 weeks though, based on what I told you ago, it seemed like we were due for a pullback, and I thought we would. We haven't got that yet. We shorted the market some, and it didn't work out when we were consolidating. We actually, I don't think we really lost much of any on those short trades in the total broader picture of it. I think we had a couple that worked out, a couple of them that didn't work out. We might have been a net lower during that time period, which was only a couple of weeks. But we're breaking out of consolidation now, and as much as I say, okay, we need to pull back, we're breaking out of consolidation. You have to go according to what the charts tell you. If I look at this picture and let my own biases start telling me otherwise and say, oh, we got to go down, that's just pure foolishness on my part. When we were consolidating and we were putting in these new lows, that was a good reason to get short, and I was getting short as a result. But then once we started putting in these 2 days and 3 days of consolidation, I started tightening up my short because we were consolidating at highs. We weren't showing much pullback off of that resistance that we were testing during this 2 day period here, or actually 3 day period. As a result, that's when you saw me starting to cover shorts after short after short, and even got stopped out of a couple of others, and we are now long 4 stocks and short nothing. So that, if I could bestow upon you any piece of advice, is don't try to be the hero when it comes to trading. There's a huge welcoming for people. The market welcomes the heroes that are willing to just sacrifice their accounts off of trying to time a market top or bottom. And as we speak right now, the futures, S&P are up another 2 points, Nasdaq's up another 4 points. Whether that holds over or not, I don't know. But we have to trade according to what the market tells us. There will be periods of trading, and I promise you this, there will be periods of trading where, because we're going off of what the market tells us and trading according to what it's willing to show us in regards to the cards it holds, we'll lose money. We'll lose money. Maybe it's over the course of a month, maybe it's only over the course of a couple of weeks. But that should not be sufficient enough to say I need to change my trading strategy because clearly something is not right. That's not true at all. You're going to have periods of losses in trading. I will have periods of losses in trading too. And just because you're having those doesn't mean you're necessarily doing something wrong. It's just that what the market's showing you, it continues to do something the exact opposite of it and running against your positions. So don't let what the market is doing create frustrations that causes you to change your trading strategy. All right. Yeah, you remember that line? I forgot all about that one. Yeah, holy cow! Yeah, that was a pretty good line in that article. What Coach is talking about is that August article that I was writing about, and I was sort of at a juncture where I was considering adding more calls to my portfolio when the market was dropping back in 2010 during that real crazy financial crisis with the European banks and everything else, and I think it was like the Planet of the Apes movie or something like that. I had taken an afternoon off and just tried to clear my head by going to see a movie, and I can't remember if I'm telling this exactly correct, but I ended up like during the middle of the movie looking at what it was doing and realizing that if there was ever a better opportunity to add a number of calls to my portfolio, then was the time to do it, and I did it. And fortunately for myself, I was right in calling that bottom. Now that's why I'm saying that I probably deserved to lose the money that I was putting into those calls, because though I came out on top, I didn't deserve to. But during that movie, some guy was like, "Hey, turn off that phone," and I tell you what, I was ready to about beat the snot out of that guy for telling me to do so. All right, so enough about that. Let's focus in on the S&P 500. Just as I said a few moments ago, we're breaking above the resistance. That may or may not hold, but from what the market's telling us, we need to go and look at being long in the market. That doesn't mean you go 100%, 120% in margin on your long positions, but slowly start trying to accumulate some long positions as they present themselves. So I'm long on 4, net 0 on, long on 4, 0 on my short positions. That's all I have is longs. And they're doing all right so far. DVA, we're up about 2.3%. Wolf had a nice day on Friday, got rid of some of its losses, up about 0.5%. GNTX has gone off to a good start as well, and so is POL, all about 0.6 or 0.8% up higher. So if we get another positive week, those positions should naturally increase in profitability. But basically, the only thing I would probably add further to the S&P 500 outside of the weekly chart I showed you so far and this daily here is that trade the trend. Pullback is possible, could be possible this week, but this thing has held on to this 10-day moving average like a champ, all except for one day, and that just shows you the strength of this rally. On the weekly chart, we're still up 6 days. We're still trading in this channel here. And notice that these channels here, this channel that I drew here, is very similar to the channel that I'm drawing here. And ultimately, we broke that channel as well. But you can see how long it went for. If I look at the weekly chart, this channel persisted for a very long time with very few negative days. But once it did, it broke the channel, and we moved significantly lower over the September to November time period, which was a great opportunity to short this market. So we'll wait for that time period to come, and it will. But until then, let's not try to front run the market and try to call the top, because there's a lot of dead bodies once you get to that top. All right. Let's go ahead and look at the current stocks that we are holding, though, and give you some thoughts on that. First one, DVA. You got the cup and handle. It's breaking out. We got in around 115 where it broke out at. Yesterday was like the first day we've had a down day on in 4 days, but overall the stock's looking pretty good. I'd say Friday is likely to be more of a breather than anything until this market does indeed pull back. Wolf. Gotta love that stock symbol, right? Very excited about what we saw out of it on Friday. Up until then, I was a little bit concerned about it because we just weren't getting the action out of it the past 1.5 days, and then the afternoon struck, and we pushed higher. So right now, I would say that it is in full-fledged breakout above that 22.12 level, so we're about 0.5% in the money on that trade. I think over the coming week, if it continues to increase in profits, I will likely move the stop loss up some. So right now, it stands at 21.40, and probably my next, once it gets some profits underneath its belt, the next logical place would be to move it up to 21.66, but that won't happen tomorrow. DVA, same thing. This is probably the best candidate for us to add a stop loss to, and I'm going to use this 10-day moving average since it's following it so nicely. Not right below it, but probably about probably like 116 flat, and we are in it from 116.20, so it basically puts us at a break-even, slightly less than break-even position. GNTX. All right, so this one's pushing up higher. We did a great job in timing the entry on that one. Had a fantastic day on it on Thursday, pulled back on Friday. Overall, I don't see any real concerns with that one. Don't see any reason to pull the stop loss any higher either. So we'll wait on that one as well. And then, of course, POL, there's not going to be any changes to this one since we just got into it on Friday. But, as you can see here, it's slightly above the breakout level. We got in at 23.16. Nice consolidation at the highs. Probably the weekly chart, if I remember correctly. Yeah, the weekly chart looks great too. So, and that's a big thing too, is trade on multiple time frames. You want things like the 5-minute, the weekly, the daily to all line up very nicely. If you look over here on the left-hand corner of your screen, you can see this POL 5-minute chart and how it traded very nicely towards its highs before it broke out. All right, let me look at YPF. Yeah, I tell you what, Garp, I really like YPF. I was close to pulling the trigger on it on Friday. Very well may do it again today. I was afraid of, because there was so little volume in the market on Friday due to the snowstorms. It was a freakish day in terms of volume on Friday. You can see here that the SPY was dramatically less on Friday, almost like holiday volume. SPX definitely below average as well. But on YPF, I was worried that because the float was so little on it, that if I put in an order and everybody else got into it, that we might move the stock too much and not make it a good opportunity for as many people as possible to be able to get into it. So I held off on it for that reason. Had it been just me trading the stock and I was just a trader on my own doing it, it probably would have been a great stock to get in on. Notice how it's holding that 10-day moving average like a champ. The other good thing about it is that we can get long on it, and if we're wrong, we're only going to be wrong for by a little bit. Probably my ideal stop loss for this trade is around 1652, 1653, because it's going to be below the 10-day moving average, and if price moves below that, I don't want to be in it at that point. It doesn't even look good. It looks more bearish at below 1653 than it would bullish. So why hold on to it? Keep the stop tight. So the pullback too, you can see here on the volume, nice volume bar surge higher, and then just lighter volume as it consolidated since then. You can see here we had a similar consolidation, and then boom, it pushed higher, followed by another consolidation. So it seems to be, of late, a couple of days of higher price movements out of it. Now, what I'm hoping for is that we don't miss the window on this on Monday if we have the opportunity to trade this one long. Typically, I'll wait about 30 minutes to an hour before I even consider jumping in a stock. Sometimes I'll only wait 30 minutes, but most of the time it is an hour. But I could bend the rules a little bit on Monday if after 30 minutes of trading this thing is right there at like $17 or so. But I would like to still get in as close to the 1675 level as possible. Really like this stock, so definitely keep an eye on it for Monday. And don't be afraid to say, hey Ryan, what are you doing with YPF? Because I will be watching and don't have any issues with giving you my thoughts on it as we go through the day there. All right, it is FCX. Yes, I'll check out FCX here. It's really not bad. Definitely some potential to it. It's got a nice trend line in place already. May even be trading within a nice channel as well. Let's see. Yeah. You have got yourself a channel play here. You got a huge gap to fill. There's your gap that still needs to be filled, and that would take price all the way up to 38.16, so about a 10% move possibility from where it's currently sitting at. The only problem that's concerning is that this 200-day moving average, which I think has lost a lot of its luster over the past years, seems to be causing a little bit of a fuss for this stock. So, and the other part of it too is because it trades in a pretty wide range each day, finding an ideal stop loss sometimes is difficult for this stock. You see, I don't want to get in until it breaks that 200-day moving average just in case that thing is going to cause it to reverse. But in the same note, if I wait till it gets above that 200-day moving average, my risk is going to be a lot more. Probably looking at like a $36 entry followed by a stop loss below $35.24. Just doing that off the top of my head, that's like close to 5% of a stop loss, I would think. So, in fact, if I was to put it at 35.24, you might as well just go ahead and put it below this channel here at 35.02, which is $1.64. Yeah, that's that's close to a 5%. So it's about a 4% stop loss. You could probably get away with it as long as it doesn't hit that in one day. Because what you could just do is, as each day passes, just increase your stop loss by wherever the channel is currently sitting at. That's a good trade. I'm going to put that on the watch list for Monday, because I do think there's some potential to that. So I'll keep a good eye on it and see where we go with it throughout the day. But overall, pretty good setup, I think. And so you're saying that you would have a buy at 35.74 and a 35.24 stop would be like less risk. Yeah, it would. But if you're going to go with that setup, you might as well just push it a little bit lower and say, you know what, I'm going to have an extra layer of support at 35.08. So if it breaks below that channel, maybe even 35.05. Yeah, say like 35.05. If it breaks below that channel, you'd want to get out. Because at that point, you're just adding an extra layer of support that might keep you in the trade longer if it gets down to that level. But then raise it each day as this channel increases in its price level. So while tomorrow might be 35.05, or yeah, so Tuesday comes around and you might be able to raise that thing up to like 35. Let me think here. 35.24. So if it just makes it to Tuesday, then you can raise it up to 35.24. But just keep rising it up on that channel there, and it should provide a decent level of risk reward as long as you get past the first few days. Off the 30-minute chart, let me check that out. Yeah, you can play it off of the 30-minute chart, and the 30-minute chart, it has sort of a secondary trend line that it looks like it kind of broke. So maybe be a little bit wary of that it could be wanting to come back down to a like a 35.33 price level, or maybe just right back down to this channel here. If it does that, I would say if it comes back down to this channel, I definitely think that's a buy unless there's some kind of news driving it, hard lower. But at that point, you got minimal risk, very minimal risk to buy it off of that trend line. So, Abe, you got Dell, could be fireworks. What do I think? Is there any news over the weekend that I missed? I didn't see or hear of any news, but that doesn't mean that there couldn't be any. I do like how it follows that 10-day moving average quite nicely. I think after that news, it came back to earth a little bit. Yeah, it's going private, but it's sort of interesting, though, because the stock is still moving a little bit higher. So, I don't know. And I'm not the best probably person to ask about these kinds of trades because I'm not typically trading around big news events like acquisitions, mergers, going private, or anything like that. I tend to sort of stay away from those trades because I don't quite understand them. Now it could keep moving higher. Maybe Michael Dell gives shareholders a little bit more for its money, but see that's all speculation and far too much speculation. Nothing that you can really make a decisive opinion on without having 100 reasons as to why you're wrong on it as well. So. No, I know that it went private, but was there news over the weekend, I guess, is what I'm asking. Yeah, I mean, I don't typically read Barron's, but so there's a chance of this deal, which until Friday morning looks like a certainty, might blow up. Yeah, I'll definitely keep my eyes on it. If it blows up, I mean, how much does it really stand to fall? I'm not sure because I think the announcement was back on, what was it, on I can't remember when they announced that it was going private, but it wasn't like a buyout where a stock like appreciates 50% or 40% or anything like that. and it gave up a lot of its gains on the day. So you have to wonder if there's really a ton of money to still be made off of this stock, and if you might not be exposing yourself to more risk than what's necessary. Hey, if it blows up, I will remember that I heard it first from you, babe. Absolutely, man. Storm and Norman, man, you want some MGM action, huh? Do you have a position in that one or no? Geez, that's a nice breakout, though. Gracious me. Oh, I know we were talking about it on Friday. 13.15, yeah, clear breakout level there. Where'd you get in at? Because 13.20, so you got a good entry on it, man. 13.24 was definitely right there in the buy range of where you'd want to get in at. I think at this point here, you guys see how much higher this thing will take you on Monday, and see if it can't be like a multi-day gainer for you. All the while, you want to keep booking profits as much as possible, or not booking profits, but tightening the stop loss on it to make sure you don't get hammered. So right now, I definitely wouldn't let this stock turn red on me. I don't know. I'm trying to think of a good spot where you'd want to probably increase your stop loss to. Right off the bat, 12.94 seems to be the most logical spot, but you would definitely lose if it hit there. Let's see, you got about 27, so you got about 2% in gains. That's the best thing to do when you're confronted with this question is look at the 30-minute chart. So, because there's usually hidden levels of resistance when you look at the 30-minute chart. That would be, yeah, that's a 30-minute. All right. Let's see here. So, it doesn't give us much in the way of an ideal stop loss there. Maybe like 13.25, but I think that could possibly get taken out on any bearishness and then pop up as well, and just normal